Hey everyone, welcome back to Financially Free. So, today we're going to be talking about SoFi in deep detail as to why the stock is always trading so volatile and why it cannot get above the $10 range. We obviously covered last week the analyst downgrade made by Michael Perito, who has a very high success rate in predicting stock prices and where their price targets should be in the past. However, there's so many more fundamental reasons as to why SoFi is not trading above $10 on a consistent basis. There's a lot of things that it needs to improve on. Their earnings was recently announced on January 29th. So if you stick around for the video, I'm going to cover exactly what those main reasons are and also how to approach if you are looking to short-term trade SoFi, how you should go about that. And also if you're more of a long-term investor like myself, what you should do to get ready in preparation for this earnings report on January 29th. But before we do that, if you could please like this video, subscribe to the channel, and share the video with your friends and family, I'm confident that we can help more people become financially free. Let's go ahead and get into it. And thank you so much to all the new subscribers here. All right. So as of Friday last week, SoFi went down another 2%, totaling about a 14% drop in price. So we really got to look into why that is. That's a pretty big move in the downward direction. So did SoFi drop 14% just based off an analyst downgrade? No, I don't believe so. Not in the least bit. I think really what it is at the core is you have to remember that SoFi is mainly controlled by traders, okay? Meaning that all the small people, the type that are, Wall Street bettors, they control this stock and their price action. Whereas like a company such as Apple or Meta, you're going to have big institutional money piling into them. And right now with SoFi, we just don't have that institutional backing. And it's not necessarily a bad thing that it doesn't have that backing, but it also means that the stock is going to be a lot more volatile because the institution really sits there as the one that is the stabilizer in the stock, meaning that if other traders go in and out, if the institutions aren't making a move, then you're not going to see these huge swings in price action on a typical day-to-day basis. They're really just going to be paying attention to the business at its core, right? So we also have some Fed speakers starting on Monday covering things like CPI, credit line interest, rates going up or down. So we really need to be paying attention this week to those speakers. And that also might be causing a lot of fear with a stock like SoFi because and the market in general, really, because if the Fed says, hey, listen, we don't want to cut rates, we want to stay with the rates that we're at or possibly even raise them up, the market sentiment overall is going to become very bearish. You're going to see a lot of pullbacks on a ton of stocks, especially a stock like SoFi, where it's really relying on people paying back their student loans and keeping interest rates lower. So if the Fed decides to keep them where they're at, it's definitely going to have a huge impact on a business model like SoFi. All right, so this here is John Williams, the president of the New York Fed, and he is going to piss in your Cheerios probably come Wednesday, all right? I don't know if you could tell by looking at the picture, but this guy is typically more doom and gloom, so definitely pay attention to what this man's saying because it'll have a great impact on the market in general, which could in turn obviously affect SoFi's price action. Now, if you're someone that doesn't currently own any SoFi shares, now might be a good opportunity to buy in if you're looking to get in and get out. And the reason for that is because with their earnings on January 29th, SoFi has shown multiple times that there's typically a rally before their earnings are released. So if you bought in at $8.40 a share today, you might be able to get out with selling at $9.50 a share or $10 a share. So you'd make about $1.50 to $2 maybe on the way up within about a 2-week period. So it could be a nice little play for you if you're looking to do this short term. This stock could be very volatile, so it might even run higher than that. Now, you also need to understand, though, if you're going to be risky and do that kind of play, is that recently in quarter three of 2023, SoFi actually went down in price before their earnings. But statistically, typically SoFi rallies before earnings. However, you do need to be warned that after earnings, okay, SoFi has historically gone down in price. So if you are going to play this short term, play it up until earnings and then get out maybe a day or two before earnings are released, because whether SoFi did good or bad on their earnings report, typically they go back down in price. And a reason for that is, again, is there's no institutional money here. So you'll have a lot of people FOMOing into the stock, trying to buy it, get that little quick term money, do a quick flip, and then, jump out of the ship because they never really understood the fundamentals of the company. They don't see the long term picture. So we're going to cover some of the market sentiment. How are they looking at SoFi right now? What are the call options? What are the put options out there for SoFi right now in the short term leading up to their earnings? So let's go ahead and look into that data now. All right, so let's go ahead and look into SoFi's fundamentals. Now, I'm not saying that this stock is going to get short squeezed, but it certainly is a possible. So, is anyone shorting SoFi? Well, according to the data I've gathered, 64,000 shares were increased on Friday, but close to 14% of their free float is currently being shorted. So, in total, this means that approximately 122 million shares are being shorted at this current day. Now, this means that a lot of individuals are predicting that SoFi will go down, so this may end up being a short squeeze play. But it's kind of a toss up. If you're looking at market sentiment, 47% of all options on Friday were bearish. So what's causing a lot of these individuals to short is that if the consumer price index is going down or believed to be going down, then this is the cause and effect of what's going to be happening. However, if there is a positive CPI news drop with the Fed, then I feel like we're going to see a lot more calls that will be made on this stock, which will cause an upward momentum and movement. So again, if you're looking to make a quick buck and play SoFi in the short term, I would highly suggest getting in now and then getting out right before the earnings call, okay? Also, very, very crucial, be paying attention to what the Fed says on Wednesday, because if the Fed decides not to cut rates, then this thing is going right back down into the $7 range. Also, set a price target for yourself. Playing in the short term can be extremely risky. Yeah, there's a high probability that SoFi is going to rally before earnings because that is what it's done in the past. However, if you don't pay attention to what the Fed says and you buy into a position now in the $8 range and the Fed decides to keep rates high, then all of a sudden your position is going to be suffering massive losses when it goes back down to the low sevens. Okay, so you need to be diligent. You need to be paying attention to what's going on. But also, I would highly recommend playing this position the long term. SoFi has a lot of potential, but with the market completely being traded for SoFi stock by the traders and it's not being controlled at all by big institutions, we don't really have that backbone yet in this company. The company is still not profitable, it's still in debt. So, with all these factors against SoFi, for me, it's too risky and too much of a headache to play it short term. Sure, I could make money, but I'm going to make guaranteed money if I take it slow and steady. For me, my price target on SoFi is $6.50 a share. If it goes anything under $6, then I start buying SoFi very aggressively. I'm going to the point where I might double my total position size in SoFi, okay? Because I think it's that valuable, or that, it's very underweight at that price. So I would buy very aggressively. And then even if I wanted to play it short term or do it more as a position trade where I hold it for a couple months, I could still get out at the $7.50 range comfortably and make a nice, 30-40% return. But how I would play it is determine your own price target. Where do you think SoFi is worth? If it's $6.50 a share, wait till it hits $6.50 a share and then just ride that wave back up. We're still waiting on SoFi to turn profitable. We're still waiting for big institutional backing. Once those things happen, and if the Fed cuts rates, that's going to give the green light to the market to say, hey, let's go. Let's get this started. And SoFi is going to be a part of that bigger picture. So then we're going to see a massive rally up. So I'm not saying, $8.40 a share where it's at now is not worth buying. But personally, I like to get in as low as possible. But I think the major thing that we need to focus on, if you're looking at this even from a long-term standpoint, is trying to accumulate as many shares as we can now, because in a couple of years, this stock is going to be worth probably double where it's trading today. So if you want to make 100% plus return on your stocks, you don't want to be too frugal and never purchase it because, oh, my average is going to get ruined. It's much better to sell 100 shares at $8 a share than it would be to only sell 10 shares at $5 a share. Okay. You're going to make more profit, even though you spent more money initially on those stocks because you have a bigger position size. So take your time. Don't FOMO into this stock. Wait till the price comes down. Make sure you're paying attention. I'm going to keep you guys all updated here on this channel because you know how we already do it over here. I hope you guys have a good day and enjoyed the video. And hopefully, this gave you some insight on how you should play SoFi short term, but also be aware of the risks that come with that as well. And I hope you have a better understanding how to play the stock long term if you're an investor like we are over here at Financially Free. Thank you, and I'll see you guys on Thursday. Thank you again so much for being here and viewing this video. If there's another stock that you would like me to deep dive into, keep you updated currently week by week, please let me know down below in the comments what it is. Also, let me know down in the comments below if you're currently invested in SoFi and what your price target is. I'd love to hear from you. Thank you and have a great day.